Hello students, how are you today? Hope you are fine and good. Now we continue Chapter 3, Accounting Cycle, Week 6. Are you ready? Let's go. 3.4 The Ledger. A. Explain two types of subsidiary ledgers. B. Explain the general ledger and how to post from journal to general ledger. C. Explain the process of balancing the accounts at the end of accounting period. .4 The Ledger. The third step in accounting cycle is post-to-ledger accounts. What is the ledger? The entire group of accounts maintained by a company. The ledgers provides the balance in each account, as well as keeps track of changes in account balances. Subsidiary ledger. A subsidiary ledger is an addition of general ledger used for recording each accounts receivable and accounts payable in detail separately. A list of individual accounts that record transactions with same nature characteristics linked to a controlling account. It's a group of individual general ledger accounts that have related transactions. There are two types of subsidiary ledgers. 1. Subsidiary ledger of accounts receivable. Records all transactions in respect of debtors with the balance. 2. Subsidiary ledger of accounts payable. Record all transactions in respect of creditors and with the balance. Where subsidiary ledgers are maintained, the individual accounts relating to accounts receivable and accounts payable are not kept in detail in general ledger. The general ledger's account that summarizes subsidiary ledger data is called the control account. At the end of an accounting period, the balance of every control account's general ledger becomes equal to the balances of individual accounts in the related subsidiary ledger. Relationship of general ledger and subsidiary ledgers. General ledger. The whole group of accounts controlled by a business. It consists of all assets, liabilities, and owner's equity. Students, you should use specific accounts titles when they are given. For asset accounts, example, cash, supplies, land and equipment. For liability accounts, example, notes payable, accounts payable, salaries and wages payable and interest payable. For owner's equity accounts, example capital, drawings, service revenues, salaries and wages expenses. Form of account. First, the simple T account. It's a simplest form. An account consists of three parts: 1. A title, 2. A left of debit side, 3. A right or credit side. The format of an account resembles the letter T. Second format is called the three-column form of account. It's more structured and normally in practice used in ledgers. It has three money columns: debit, credit and balance. The balance in the account is determined after each transaction. Posting record to general ledger. Posting is the process of transferring records from the journal into the appropriate ledger. Posting should be performed in chronological order. The company should post all the debits and credits of one journal entry before proceeding to the next journal entry. Posting should be made on a timely basis to ensure that the ledger is up to date. Illustrations. Posting a journal entry. 1. Post to debit account, date, journal page number and amount. 2. Enter debit account number in journal reference column. 3. Post to credit account, date, journal page number and accounts. 4. Enter credit account number in journal reference column. For sales journal, the company posts to individual amounts to the subsidiary ledger accounts receivable daily. At the end of the month, the company posts totals to general ledger, a debit to accounts receivable and a credit to sales account. For purchases journal, the company posts to individual amounts to the subsidiary ledger accounts payable daily. At the end of the month, the company posts totals to general ledger, a debit to purchases and a credit to accounts payable. For cash receipts journal, the company posts such as cash, sales discounts, capital, sales and account receivable to the general ledger. For cash payments journal, the company posts such as cash, bank, purchase discounts, salary expenses, capital, purchase and accounts payable to the general ledger. For general journal, the company posts other transactions that cannot be entered in a special journal such as vehicle, notes payable, sales returns and allowances, purchase returns and allowances account. The ledger provides the balance in each of the accounts. For example, the cash account shows the amount of cash available to meet current obligations. There are two forms of account, which is T account and three-column account. In T account, the account balances are calculated only at the end of the accounting period. The debit and credit columns are totaled. Example: for cash account, the credits are taken away from the debits to calculate the closing balance. The closing balance will be carried forward to cash ledger for next month and entered as the opening balance. The three-column ledger account provides information on the balance on the account after each debit or credit entry has been posted. The balance amount column showed the net or latest account balance after each or every transaction. The balance on an account is available to the user at any point in time. Thank you, hope to see you in my next video. Bye.